let me take you to Midway. So the company is about 4 or 5 years old. It was set up by and founded by Mark Bristow, the CEO of Randgold. And we are focused on Africa, on discovery resources. So currently, we are active in Nigeria and Kenya. We have a very simple approach, which is to try and bring discovered resources to production, a focus on mitigating and managing execution risk as best we can, and deploying our experienced personnel and some of our key stakeholders to help us deliver that. We have a gas project in Kenya and an oil project in Nigeria and several oil options that we've developed down there, which are quite interesting. We would hope to be able to bring Nigeria and Kenya into production and into free cash flow by the end of 2019, early 2020, at which stage we'll consider an IPO or some sort of crystallization of value or exit strategy. We're led at board level by Mark Bristow, who's the chairman. He's the second largest shareholder in the company. We are a private company, and so we have about 4 major shareholders and about 30 smaller shareholders. Exclusively high net worth at this stage. We have no institutions on our share register, but we've reached a stage where we do need to expand our share register to encompass some institutions. So in Kenya, we have a 7,500 square kilometre, 2 blocks under PSC terms. We hold 90% interest in those, and we're the operator. The blocks contain 2 gas discoveries made in the early 70s when gas was not a fungible product in East Africa. They're made by Shell BP. One flowed about 3 million standard cubic feet a day, the Dori 1 well. And the second well, Pate, we believe flowed about 10 million scuffs a day, but it was a well that they lost control of and eventually plugged and abandoned. Currently, we are re-drilling that well, so we're at about 3,800 meters today on our way to 4,500 target depth. And so I had hoped that today we would have been in the reservoir or near to it, but operations have held us up a little bit on that. But we're getting close to the target zone in that well. The well is strategically located. So Port Lamu is the second port that's been developed by Kenya. Mombasa, as you know, is pretty well overwhelmed with traffic. So they've developed a second port, which is under construction. Our well is on Pate Island, which is actually in the harbour, and we lie about 10 kilometres away from the port. And we're close to a grid connection for electricity, with 200 megawatt grid connection down to Mombasa. And we've ideally located also to do the second commercialization route that we've adopted, which is micro LNG. And we're going to take that LNG down to Mombasa and use it to back out some of the heavy fuel oil and diesel applications that are used down there. The location is also at the end of the Lapset corridor. So this is the corridor down which Tullow and African Oil will need to bring their oil, and that pipeline alone requires something of the order of 320 megawatts of power. There is already a power station that's been approved by the government in favour of a company called AMU Power for 1,000 megawatts, but it's a coal-fired power, and it probably won't survive a decent gas discovery as close to the port as we are. As I said, the 2 commercialization routes are temporary power to start with, probably 100 megawatts based on 2 wells. And if we're successful in the current well, we hope to proceed directly to drill a second well, which will provide the redundancy for power generation and or micro LNG. The resource estimate that we have for the block, not for the block, for the Pate project is about a TCF of gas. It's got a quite wide range at this stage, between 300 BCF and 3.5 TCF. And there's quite a lot of upside in the surrounding hinterland acreage, which is a gas-prone basin. In Nigeria, we have a slightly different approach, which is to concentrate on oil. We have 3 projects that we're working on there. The first is TSB, which is a marginal field in the Calabar region on the eastern border with Cameroon. It's about 20 million barrels of recoverable. We hope to develop that and produce that back through the Abana facilities operated by Monipulo, which can go straight to export market. We're also chasing two much larger producing assets, which we would consider them being distressed in the sense that the owners have very little access to equity. The banks are distressed in that they're being paid interest, but they haven't been paid any principal, and the fields are world-class. They're all ex-Shell or IOC fields. And we've adopted a slightly different approach with these, which is a risk-sharing contract under which we bring investment to enhance and improve and increase production, and we take a relatively fixed rate of return out of that, and when we've actually achieved our return, then we withdraw from the block. So we haven't had to go through long negotiations about acquiring the block or dealing with bank exposures. What we do is take a share of the cash flow based on increased production. And we deliver quite good returns. We help get the banks, a substantial way towards repayment, which they otherwise wouldn't, because these fields have not had any investment now for 4 or 5 years, and they're simply in slow decline. And unless someone brings some investment to them, they are going to continue that decline. So we're one of those fields we have partially funded through oil trading, a commodities trading firm, and we are looking for some matching quasi-equity investment in that. The TSB field is a relatively simple, plain vanilla upstream unit. Originally, this was conceived as being something that could be developed using barges and small tankers, but we've decided that's not viable in the tides and currents that we have here. So we're going to take it back through the Abana facility and then down to Antan, where we can export it, and that's a well-proven route. Monipulo has been running crude down there for near on 20 years now. This is just to give you an idea of one of the assets that we're working on and the sorts of terms that we're dealing with. I won't attempt to go through, but it is in a sense a traditional risk service contract by another name. We have a secured interest, so that we come in with legal security behind the banks. So your position is the investor's position is relatively well protected, and the main variable is your internal rate of return. So if the oil price is up or your production is better than what you anticipate, then your IRR will improve because you're going to get your cash flows back, your return back earlier. So it's a fairly simple model, but it's a well-tried, and I think it works quite well in Nigeria because you avoid lots of the issues you have when you're trying to negotiate assets away from Nigerian indigenous owners. Finally, this is just to summarize. So we're in the two countries. We would hope that Kenya could be in production by the end of next year on either temporary power or micro LNG. And in Nigeria, we would hope that one of those assets would be brought into production, either the existing producing assets or the TSB field, which is a relatively plain vanilla upstream development. And that's it, folks.